Today I've brought you this amazing trading strategy that is based on the market momentum and the candlestick patterns in the forex market. And the best thing about this strategy is that it's very easy to learn and it's all applied using the pre-indicators that are available for free in TradingView. And I'm going to show you how you can detect the candlestick patterns automatically in TradingView as well, which you might not have known till now. So without any further ado, let's get started. So as I mentioned in the intro, this trading strategy is going to be heavily based on the market momentum. And for that, we're going to need the exponential moving averages. So for that, let's go towards the indicator tab. And here we're going to search for EMA. That stands for exponential moving average. And we're going to add these twice to the chart. Now, once these exponential moving averages are added, let's go towards the exponential moving average settings. And inside here, we're going to tweak these settings so that we're going to change this style, and in the EMA style we're going to change this color from blue to yellow, and also we're going to increase the line thickness so that we can see it a little bit better. And now also we're going to go to the second EMA settings, and inside here in the input tab we're going to change this length from 9 to 21 so that it will be a little bit longer period EMA. And inside the style of this indicator we're going to go to the EMA settings, and inside here we're going to change its color from this blue to red. Now also we're going to increase the line thickness, and once that's done, let's hit OK. Now you can see that there are two EMAs being plotted, and the working of these EMAs is that it tells us about the market momentum in the market. For example, here we can see that the slow period EMA is below and the fast period EMA, that was 9, is above. And whenever the price action is happening above this sequence or above this pattern, that is whenever the fast period EMA crosses above the slow period EMA here and the price action is happening above it, that would mean that the market momentum is in bullish direction. And also here we can see that after the cross under of this fast period EMA below this slow period EMA, we can see the market moving in the bearish direction. So that means that market is in bearish direction. So that's how we're going to use these EMAs to detect the market momentum in this Euro USD chart. Now let's go ahead and add the second indicators that we're going to use for this strategy, and this is a little trick that you might not have known till now. So you can go towards the indicator tab, and here you can go towards the technicals, and inside these technicals you can go to these patterns, and here TradingView has made all these indicators available to you for free. So here we can see the candlestick patterns indicators that you can use for free on TradingView platform. So for our strategy, I'm going to use the engulfing bearish and engulfing bullish candlestick pattern. Depending upon your TradingView subscription, you might not be able to add 4 indicators onto the chart, but what you can do is, if you're looking for short entries, you can just add the EMA bullish and bearish, and if you're looking for long entries, then you can add the EMA bullish. So that's how you can use this strategy. But here I have the premium subscription, so I can add all 4 of these. And now here you can see that these indicators, once added, detect the bullish and bearish engulfing candlestick patterns onto the chart. For example, here you can see the indicator is telling us that there is a bullish engulfing pattern because the body of this previous candle is totally being engulfed by this next candle in the bullish direction. And after the formation of this bullish engulfing candle, we can also see the market moving in the bullish direction. So at the end or at the close of a bullish engulfing candlestick pattern, we can see that buyers are in momentum and they are pushing the market in the bullish direction. Similarly, if we look at the bearish engulfing candlestick patterns, here we can see that there is the formation of this bearish engulfing candlestick pattern, and at this pattern we can see the body of this previous candle is totally being engulfed by this next bearish candle. And also this tells us about the shift of momentum, and at the close of this long bearish candle, we can see the market is in bearish momentum and sellers are driving the market in the bearish direction. So this is the trading psychology behind using these bearish and bullish engulfing candlestick patterns. And if we go towards the indicator setting here, for example, if we go towards the engulfing bear, we can go ahead and inside the inputs we're going to change these detect trend based on filter, and we're going to change this to SMA 50 and SMA 200 so that it's going to look for the crossovers and only find the patterns that are above or below those crossovers. And also inside the bull settings, we're gonna go ahead and change this SMA to SMA 50 and 200. Now once these settings are done, let's go ahead and talk about the trend rules for taking long and short positions. So the rules for taking short positions are as follows. First of all, there should be a bearish engulfing candlestick formation, as you can see indicated by the indicator, and the indicator also turns the background area of these two candles where this bearish engulfing candlestick pattern is forming to red. So you can easily determine that there is the formation of this bearish engulfing candle because the body of this previous candle is totally being engulfed by this next candle. So this is the first rule. The second rule is that the fast period EMA, that is denoted by this yellow color line, should be below this low period EMA, that is denoted by this red line. And this means that market is in bearish momentum. Once these two rules meet or are satisfied, we can go ahead and take a short position at the close of the candle where the bearish engulfing candlestick pattern is forming, and we can put our stop loss at this last swing high, and we can target 1.5 raised to our ratio. So let me just go ahead and adjust our take profit level, and as you can see, our 1.5 raised to our ratio is here. So we can see that this trade is easily a profitable trade of 1.5 raised to our ratio. Let's go ahead and take a look at another example of taking short positions. So for example, here you can see the first rule is that there should be a bearish engulfing candlestick pattern signal forming, and also we can see that fast period EMA is below this low period EMA, which means that market is in bearish momentum. So both our conditions are being satisfied and the crossover is happening here. So we can go ahead and take a short position at the close of this candle where the bearish engulfing candlestick pattern is forming, and we can put our entry at the close of this candle here, and we can put our stop loss at the last swing high. And again, we will be targeting 1.5 raised to our ratio. So let me just go ahead and adjust our take profit level, and as you can see, our take profit level has easily been hit. Now let's go ahead and look how you can use this strategy to take long positions. The first rule is that there should be a formation of bearish engulfing candle, as you can see here indicated by this indicator, by forming this label. The second rule is that the fast period EMA should cross above this low period EMA, which we can see happening here. So this means that market is in bullish momentum. Once these two conditions are satisfied, we can go ahead and take a long position at the close of this candle where the bullish engulfing candlestick pattern is forming, and we can put our stop loss at this last swing low, and we'll be targeting 1.5 raised to our ratio. So let me just go ahead and adjust our take profit level, and here we can see that our take profit level has been met, as we can adjust it here, and we can see that our take profit level has been hit, and this trade is easily a profitable trade of 1.5 raised to our ratio. So this is how you can use this very simple trading strategy by combining the momentum of the market and the candlestick patterns indicators that are available for you free in the trading view. I hope you liked this video. If you have any questions, please comment down below. I would love to answer them. Also, don't forget to like, share, and subscribe. See you in the next video. Thank you.